Most people think investing $1,000 doesn't really matter. Like $1,000 is too small to change anything. But that exact belief is why most people never actually build real wealth, because they never even get started. The first $1,000 is not about getting rich overnight. It's about setting the trajectory for every single dollar you invest after it. If you invest this wrong, you could stay stuck for years, thinking you're doing the right things while actually building bad investing habits, and that's dangerous. But if you invest it right, that $1,000 can compound into something way bigger than you ever imagined, especially if you start in your 20s. So if you had $1,000 to invest right now, what would you put it into? Go ahead and drop a comment down below. Now, before we even talk about investing the $1,000, we need to set a few ground rules. First, we're going to assume you already have an emergency fund. That means at least 3 to 6 months of expenses saved in cash. Second, we're assuming you don't have high-interest credit card debt. If you're sitting on $10,000 or more in credit card debt, that needs to be your priority, because no investment is beating a 20%, 25%, or 30% interest rate, period. Third, we're assuming this money stays invested for at least 5 to 10 years. If you understand compound interest, you already know why. The longer your money stays invested, the more it builds on itself, like a snowball rolling downhill. The goal of the first $1,000 is not to get rich quick. It's to build investing habits you can follow for decades. You're going to see what markets actually do. You'll watch your money go up and sometimes drop, and you'll learn how you react to that. Most beginners treat $1,000 like a lottery ticket instead of a foundation. That's the mistake. You don't even need to invest it all at once. You could invest $100 a week for 10 weeks, or $100 a month for 10 months. Now, I'm not a financial advisor. This isn't professional financial advice. But one of the simplest ways to start is investing in broad market ETFs. They're boring, and that's a good thing. You're buying a basket of companies instead of trying to guess winners. And historically, this approach beats most stock pickers, day traders, and hype chasers. Option 1 is simple. Put the full $1,000 into a total market or S&P 500 style ETF and leave it alone. Option 2 is a split strategy. For example, you could put $700 into a broad market ETF and $300 into a growth-focused ETF, something more tech-oriented. This keeps most of your money stable while letting a smaller portion be more aggressive. It also keeps you engaged, which helps prevent boredom selling. Yes, that's a real thing. The key rule for the aggressive portion: no day trading, no meme stocks, no leverage, and no options. Just slightly higher growth, not gambling. When you're young, your biggest asset is time. That's why growth matters more than comfort. Someone who starts investing at 20 has a massive advantage over someone who starts at 30, even if they invest the same amount. And here's what people don't realize. Doing nothing with $1,000 is actually risky. Inflation quietly eats away at cash. Your dollar today will be worth less next year, and even less after that. That $1,000 could be worth $20,000, $30,000, or more decades from now. But more importantly, it changes how you think. Once your money is invested, you have skin in the game. You stop thinking like a consumer and start thinking like an owner. And that mindset shift is powerful. Seeing your money move teaches emotional control. It prepares you for bigger numbers later. Losing $200 on $1,000 hurts, but it's nothing compared to panicking with $100,000. That's why learning with small amounts is actually a gift. Markets will drop, headlines will scream, people will tell you to sell, panic, or wait for the perfect time. The truth is simple. Investing rewards participation, not perfection. Your first investment won't be your best, and that's okay. It's supposed to evolve. Start simple, stay consistent, learn by doing. Because wealth isn't built by watching, it's built by showing up. So don't wait, get started, and let that first $1,000 change the way you think forever.